Welcome to the HMO Property Show. By investors, for investors. Catch us weekly as we discuss all things cash flow positive property investing. Whether you're a seasoned investor, a new landlord, or just curious about property investing, this is the podcast for you. Sponsored by the Co-Living Collective, your trusted partner in creating vibrant and sustainable shared living experiences. Visit us at colivingcollective.com.au to learn more.
Hello and welcome back to the HMO Property Show. This is Jo Gibb, your host, yet again taking over the mic. Today we're joined by Julie Taylor, a seasoned investor, very experienced in the property investment space. She's actually really inspirational and somebody who I remember many moons ago on our first investment journey when we started, we would look up to you and come to your events and you would talk about strategies. So you are pretty awesome, Julie. So I can't wait to speak to you today. Welcome.
Thank you so much, Jo, and it's lovely to be talking to you rather than Neil
Good.
It's so good.
Love that. So I really want to go back to, really back to where it all started. So before it even kicked off and why you then got into property investing, if you could, let us know a bit about your background.
So I actually feel like I've got two lives. So my first life, I used to be a management consultant. I was married and I loved my work. I actually say I was fairly addicted to my work, and I was married. And my ex worked for BP Australia, and we moved around Australia and then we moved around the globe. And so we went from Perth to Melbourne to Perth to London to Melbourne to Brisbane to Shanghai to London to Guangzhou.
Wow.
And so whenever we could, as we moved, especially around Australia and London, not China, we would buy somewhere rather than rent. And it just came from me saying, why are we renting? Surely we could buy. And I got my ex to go and talk to BP Australia, and they said, yep, they were prepared to give us the money that they would have spent renting. They would give us that money. It would be subject to fringe benefits tax. And we used that to go off and buy property. So we'd buy in Melbourne, and we bought in Brisbane, and then we bought in London under that scheme. So that's really how we started with property investing. And then my son was born in the year 2000. We were living in London at the time. And I was pretty sure I'd be going back to work within about 2 years. And we moved to Guangzhou. We're supposed to be in Guangzhou just for a year in China. And then we're supposed to be going back to Shanghai, where I'd helped set up Ernst & Young's consulting office in Shanghai. But things didn't work out that way with BP, and we actually had to stay in Guangzhou. So, my son was 2. I realised I wasn't going to be able to go back to the work in Guangzhou. So I could say to my husband, right, we needed to leave, or I could try and do something else. And that's when I looked at, we had always, right from within a couple of years of being married, we created what I call my asset and liability statement. So every year we'd write down what our assets are, what are our liabilities, and we just look at our finances. And from doing that, I realised that we'd made almost as much from just holding these properties, which we just bought to live in. And then when we moved out of that location, we just got tenants in to pay the mortgage. We'd made as much as that as we had with our expat salaries. So it was like, this property stuff is pretty good. So it was about the year 2001, 2002, and I started reading Steve McKnight's, books on, how you go from zero to whatever number of properties, and that's how I got involved in it. That's how it started.
Yeah, awesome. So you've always just been quite savvy in that space anyway. That sounds like you've always just known there was more and you need to be better and smarter with your money.
Yeah, but I think we probably wasted, I don't think we necessarily wasted money, but we were quite good at not perhaps overspending, and we just accumulated money and we'd use it to pay down these mortgages that we'd managed to gain. But we weren't really actively measuring how successful the different properties were, and we could have done a lot more. And so we were getting expat pays for 2 people, but we weren't using it effectively, and we could have done better.
So what was the next steps?
So then we're living in China, and I was trying to work out, how am I now going to make property investing as my career? And I started, first of all, trying to follow Steve McKnight, buying properties in regional Australia for cash flow. And I couldn't make the numbers work, and I would be ringing up estate agents in places like, Kalgoorlie, and, be looking at properties, and the numbers didn't work for me. So I ended up doing two things. I ended up buying a commercial property in Tasmania. So I got my first commercial property using a buyer's agent. And I also used some buyer's agents to start getting some sites that I could develop in Brisbane. So I started that when I was about 3, I guess. And then my marriage fell apart when he was 5, so a couple of years later. We were living in China. My visa was about to expire. My ex moved out. So I had 2 weeks to decide where was I going to move, where was I going to live, how was I going to support my son, did I need to go back to my original day job, or could I make my investing be the way to actually support myself and my son? So a few fairly major decisions.
Yeah. And what year was that?
That was end of 2005, beginning of 2006.
Okay.
And I put, you go through the messy divorce and the financials, and I basically said, I'll give myself 2 years. I put some money effectively aside so that we could feed ourselves for the next 2 years. And I said, okay, I'll give myself 2 years. I was very fortunate. Places that I had worked in Australia approached me and were offering me jobs. But
all this while you were in China still?
By then, yeah, it was. Well, because I had to be out of China within 2 weeks.
Oh, yeah, right.
So I'd come back and I'd gone to Perth and Brisbane, and I knew Melbourne quite well. And I was trying to decide between the 3 cities where I was going to live. And while I was sort of travelling around, I had the job offers, but I decided to come to Perth where there wasn't the sort of work that I could do. But Perth was where both sets of grandparents were. Mm-hmm. So I thought I'd come here. I thought there'd be more support. And I thought I'd give myself 2 years and see if I could make it work. Yeah. And it did work out.
Well, yes, it very much did.
Yeah,
and you're here to tell the tale. And this is all coming back to me now because I remember...
You have heard it.
I have heard this. I was like, Julie, I don't know if I know your background. Oh, no, I do. It's the baby brain that's kind of made it muddled for me. Yep. But you're back in Perth. Aaron is 3, 4?
No, he was 5.
5 by this stage.
5 to 6, yeah.
Okay, cool. And then you continued your property investment, investing in Perth. So you didn't go and get the day job?
I didn't get the day job, no, not at all. But I was doing projects, especially in Brisbane, because we had thought we were going to go back to Brisbane. And I had a person that had been managing my projects that I had been doing in Brisbane. They were still there, and so I was sort of talking to them. And then I was just trying to see, well, okay, what can I do in Perth?
So just coming back to obviously your marriage breakup, and obviously when you're in a marriage and you're doing things together, so you're both doing the property investing together, how did that feel? Obviously the breakdown of the marriage and then you moving back to Perth, having to leave China so quickly, that decision for you to take on the property investing, how did you feel? You know, you're not only just doing this in a partnership anymore, you're doing this as a single mum now and have that him as a sole priority as well as creating money and everything for you to live.
Probably the most scary thing that happened is that I'd bought this commercial property and we had to obviously agree who would get what assets, and for me to keep the commercial property it would mean, and so this is 2006, I would personally have to take on about 1.4 million debt against that property. And I found that really scary. And I'd negotiated with my ex that we would hold it jointly. And then I really remember waking up in a panic one night because it was like, yeah, but if we're owning it jointly, it means I only get half the income from it. And I just didn't have enough income. So it gradually dawned on me. So then it was like, okay. So I then had to approach a broker and say, well, is there any way that I can get finance under my own name for this property? And well, I did. We went to second-tier lenders and I did get finance for that property. And it meant the property wasn't delivering the cash flow that I had expected. So it was probably delivering about half the expected cash flow. So thank goodness I didn't end up with just a quarter of it. But that cash flow really made sure that I could at least go and buy food. Yeah.
So I mean, what a scary time.
It was
because
really scary.
A lot of people have the certainty with a job and to do the, not just property investing, but property investing now that you're on your own as a single mum in a new country or a new place. Very, very scary. Yeah. But I can tell even from your marriage, it's like, why are we doing it this way? Like there's always the solution focus, Julie. I feel like you're not the type of person who dwells on the negatives, but you also love a bit of a challenge and adventure. So that's why probably property investing was good for you. So
it was just a project. So my background had been really project managing fairly large multi-billion-dollar business projects. So then to go and manage, especially as I moved through it, manage, say, a $2 million development project.
Easy.
To some extent it was really easy. What surprised me was the emotional impact. So suddenly where it was just very logical, it was like, this is my $2 million. Yeah, if I do something wrong, this is my money and this has the potential to send me into bankruptcy.
And it's not just about you, it's about you and your little boy. So that then increases that. Right? So from there, obviously, you've had this that wasn't giving a good enough return, but it was getting food on the table.
Yes.
So tell me what happened next. How do you get to be the person that you are today with these portfolios?
So I think to some extent time just helps and you start to run a few projects. So we were so as my marriage ended, it wasn't far off finishing my first development project, which was 2 houses side by side in Brisbane. And I never forget, my son was pretty upset, but you talk to him about lots of things. And I remember him sitting on the step after we went and inspected this house as it had been finished. It was the first one that I'd ever built. And he said to me, Mum, so I don't understand, how's this property going to help us? How's this property going to help us live? And I explained to him that, well, we're going to have, we own it with a bank. And that we'll have people come and live here and these people will pay rent and a lot of that rent money will go to the bank to pay for the loan, but what's left over we use to feed ourselves. And so I'd already had one project finished and I had a second block of land, so I selectively kept our assets, so the assets that could support me in going through as a developer I retained, and my ex left when I had 2 offers on properties, but then it was agreed that I would keep them. So I was able to keep it and then go and get the DA and start doing the next project.
And what incredible lessons you giving Aaron from such an early age as well, because not only is he starting to understand, I guess, the logistics about property investing, but also how you as a mum, as a parent, are really driving that for him and for the way you're living. So that's incredible.
I have to tell you my favourite story.
Go.
I remember when he was in high school and he was studying economics. I think it was something like his second year high school. And they had to write an essay on interest rates. And he came home and he said, the teacher told me it's the best essay he'd ever read on interest rates. And I thought, that's what we talk about.
Oh my God, that's so good.
Yeah, it was hilarious.
Yeah, I thought you were going to say I wrote that for him, but no, he actually just took on the knowledge.
I had nothing to do with it. I'd never even got to read the essay, which really upset me. But it was lovely feedback. So he had absorbed something.
Absolutely, and he still is today because I know he's involved in some of your...
Me,
which is awesome.
Yeah.
So I think, and to set the scene as to why I wanted to have a chat with you today, because not only are you really experienced and you've been there for a lot of our journey in investments, we've discussed a lot about what we can do with our investments, and I know there's a lot of impact that you're wanting to make. And, you've gone from the single mum, just striving and really just trying to build up your property portfolio, which, I'll get you to explain in a minute what your portfolio looks like, but also now what the next steps are to make more impact in this space, because I know that there's a special cohort that you are really interested in, that we're really aligned with. Yeah. And we really just want to kind of get the message out there that, the government are doing what they can in the housing space. However, they could do more, but we can do even more as private investors, and why we should, I guess, be thinking differently about our investments. So talk to us now about what your portfolio looks like today, and then now the difference between you just trying to make ends meet to actually what you're trying to do on the other end.
Okay. So I have explained this in the first interview that I did with Neil. So we have talked about my portfolio approach before. I think it was episode 6.
Okay, so go back to that. We'll skip the...
I can really quickly summarise
Just a quick summary of where it's at now.
I split my investing into high, medium and low categories. My high, medium and low risk categories. My low risk is where I typically hold residential property. My medium risk is where I typically hold commercial property. And my high risk is where I tend to do my developments. And when I do a development, I like to hold as many as I can, or at least some of things that I'm developing. And then I seed that. I've always been seeding it into my residential property. We're actually at the point now where we're trying to get into developing commercial property and then seeding some of the commercial into my commercial segment of my whole portfolio. So that's my portfolio approach. And I should just emphasise, I rely on passive income from my medium and low risk, which is my residential and commercial property income, to actually pay for my day-to-day living expenses. So that's quite important to me, and I think helps take a lot of the risk out of trying to support yourself from your property investing. So that's really how I do it.
Yeah, awesome. And we will talk a bit more about that strategy, or the need for more education in that a topic of actual managing your finances to be able to live on versus spend. Because we know there's a lot that needs to be done in that space. But let's talk to how we opened up the conversation and what's important to you now in your investing journey.
So I've been really aware of, so as a single mum coming back to Perth, I hadn't lived in Perth for over 20 years and I needed to make new connections, and I had a 5-year-old son. And one of the first things I did is I went to a single parents meetup group, and I never went again because I found it the most depressing thing I'd ever been to. And I was talking to other parents and they were telling me things like, they could barely afford to feed their children. They were struggling with housing. They couldn't afford to do anything or go anywhere. So this was just a picnic where everyone brought their own food. And I just found I just wasn't in the headspace when I could cope with it, because I could just feel energy being drained. And it's like, okay, so to me this is a real challenge, and I had to go out and make different sets of friends in different spaces. I'm also aware now, I think as a divorced female, I tend to attract other women that seem to have marital problems. They will often come and talk to me about it. I've talked to way too many women who are then going through divorces. I think I did mention my son did go through a private boys' school. So it's a fairly high socio-economic group. We were paying a lot for their fees. So many of the women, too many women, were getting divorced. And quite a few of them, the husbands were deliberately setting out to leave them with nothing. Their whole objective was to leave them in poverty. And I really struggled with that. So here we are in a fairly high socio-economic group, and here are these women that people are attempting to leave them in poverty. And
when they've been the ones that raised the children and focused on the children.
Yep. Yeah. And they often didn't know or understand the finances of what was going on in the family. They were often struggling with finance. They were struggling with housing. There was one case where one of the women ended up going and living with other friends because she was kicked out of the marital home. Door locks were changed. She couldn't get back into that home. She had nowhere to go. She ended up living with friends. So you listen to anything on housing and they tell you that the demographic that's growing the fastest for homelessness is women over 55. And I've seen that amongst friends and my network. So I would love to do something about how can I operate in that space. I've tried a few things. I haven't quite got it right yet. We haven't found the solution, but that's the space that I'm really quite passionate about. And it really just comes from my own lived experiences. And it's like, okay, it's very easy for anyone to be in that situation. The other point that I really wanted to make is I believe very firmly that the government could be doing more in what I would call the social housing sector. And it's the same for people who are on pensions. So where we really need the most support, I'd like to see the government step in. But I'd also like to see, I think the majority of Australians have more capacity to look after themselves. So how do we enable people to do that? And I think a lot of it comes down to skills and knowledge for financial management and investing. And if we could do something to sort of spread the knowledge, encourage more people to understand the basics of finances, we would have less people needing support. So that's another aspect to it. Yeah. And another one is, so I would like to see the government do more for social housing. We all know that we also have the private rental sector, which I'm a part of. And certainly there are some people I don't want to be tenants in my houses, and I expect the government to pick it up. But there's also this, what I think of as people who have the capacity, they just perhaps need a little bit of a help for a short period of time. And so for women, say, over 55, one of my ideas is that I would love to create some more passive income, which I then donate through to some charity, and from that charity we pay women over 55 for their housing for maybe 6 months or a year. Just gives them time to get themselves back on their feet, so they don't necessarily have to go through crisis accommodation, we can just make sure there is more housing available for them. I'm happy to fund some of their rent for a year and then they can get back on their feet. So I think there's this middle ground as private investors where we can do something for contribution that isn't necessarily targeting the bit where I'd really like to see the government step in and do a lot more.
Yeah, and I really agree. And this is where we really align, Julie. And I get excited thinking about this space and the impact that we can do. It's just trying to get it off the ground a little bit.
And find this, what do we really need to do?
Yeah, and you've got one of our co-living property that we manage. And I know when you initially set that up, it was with the desire to house women in their 50s,
Yes.
50 plus, but it didn't quite work out that way. And we can't, it's been really hard for us to actually target that cohort specifically. And, if anyone listening knows of any groups or any connections that we can kind of really tap into this cohort, because this type of housing is a very dignified style of housing that can really help them get back on their feet. And with the extra additional support that we can give them, whether it's that financial knowledge, I think there's loads in that space, well-being support, connections with each other, so that we can we know human connection is such a need. Yes. And the loneliness epidemic, which is rife. We can support these women in really good housing, and we are going to find a solution where we can get this charity set up or engaged through partnerships, so we can make sure that more investors are able to open up opportunities for people who need housing or supportive housing. But you're right, we don't want to, I think there's a lot of concern that people think that we're just trying to put everyone in this style of housing, right? Because it's not just about the vulnerable groups. We need every kind of asset class, or is it asset class? You've got your social housing, you've got your private rental market. We are in between that. And we do need the government to pick up more on that lower end, so that we can house people, singles and couples that we can help really thrive, and then therefore frees up the private rental for families. And that would be a really good base. At the moment, there's a lot of muddy water between. There's families trying to get into our style of housing because they can't find anything else. People on the social housing wait list, that not all of the people on social housing wait list need to be on there. But there's certain groups that come through that we just can't support. So let's chat about, there's an individual that we thought was actually going to work really well. In your property, you've obviously got, let's talk a little bit about your co-living property, and is it performing for you? Are you happy? Talk me through that journey.
So we were specifically out looking to buy and again, I've talked about it in one of the earlier podcasts, not sure which one it was, but we specifically went out, found an older home that we converted to make it 6 bedrooms, 5 bathrooms. I put more bathrooms in it because I was working out what is it that women over 55, which is basically my demographic, I felt more of us wanted our own ensuites. I thought that was quite important. So I put more bathrooms in than perhaps you normally would in a conversion of a property. I'd also chosen this particular property because it had a huge sort of family dining kitchen area with rake ceilings, and I just thought it would be a lovely co-living space.
It had a really good feel about it, actually. It was really homely. I do love that property.
Yeah, it was just it was just amazing. And then we got that finished and we took it out to the market. We're really trying, you can't advertise for a particular demographic. You can't say we just want women. The property manager that you guys had provided, she was fantastic. She knew what I really wanted. And we ended up having one lady in that over 55 group come into the property. And unfortunately, within about 3 months, we actually had to kick her out, or your property manager was really on top of things and found that she was taking drugs. So she'd obviously gone clean. She'd gone back and lived with her mum. She told us that she needed to live with her mum to look after her because her mum was unwell. I think that was a bit of a lie. And then she was coming back. It was her first step out of her mum's support network to see if she could make it work, and she didn't. She went back to drug usage. So we had to kick her out, which is an awful thing to do. But you've got to look after all your tenants. You've got to look after your property. So she was asked to leave. So we haven't had the success in targeting women over 55 at all. We don't know how to get to that demographic that we'd really like to help and support, so that's a real challenge. But aside from that, the property's worked out fine.
Producing cash flow and it's doing what it needs to do, but the impact piece isn't there yet, and that's what we treat really.
So now we're sort of going, okay, well, what can we do next? What is the next thing to try. And how do we get to this demographic? I also believe that the fundamental problem across Australia right now, we just have a shortage of housing. So we need to do more in terms of building housing. And I'm not building at the moment. And the reason is it's just really hard to make the financials work, because the cost of construction is so high, the time that it's taking to get things through councils are really challenging. All the regulations that are going on can be challenging. So we're just not building, which we need to be. And we need to have more flexibility in what we can and can't build in certain locations. And I'm not into the big high rise, I'm not into big high density, I'm really in that missing middle, and it's very hard to develop on that.
Yeah, and I think that's where the government again have a part to play, but
yes.
It's a
real journey.
Yeah, it is such a journey. Yep. But I'm really actually excited to be working on this with you, and I think that I'm looking forward to hopefully future episodes where we can talk about how we've actually nailed it. But I feel like, there was Anissa who I interviewed a few weeks ago. Yeah, and she's been trying to do something similar over in Melbourne, and she's now going to open some doors, and she's connected me with somebody else. So I think if we all kind of join the dots together, but if there is anyone listening with that cohort in mind, we definitely want to hear from you. There's another thing that I really want to talk through that you spoke about on your talking about contribution, and I think this is quite key for anybody out there who feels a little bit stuck. You talked about your why and needing a why, and you've shown me, and I'm actually going to get this uploaded onto the Instagram page or wherever we need to put it. But your actual diagram of the structure of what's important to you and how you find your why, because I think that's going to be helpful for other people, and it really talks to that contribution piece.
So I'm happy to talk. So one of the things that happened, so when I came back to Australia and I needed to try to figure out where we're going to live, find somewhere to live, we actually rented for a year in a duplex half, and I would have loved to stay rent vesting, but that didn't have a great relationship with the landlord, and I couldn't get things done to the house that needed to be done. So I ended up buying. So by the time I'd sort of gone through all this, it was a good couple of years, and I'd worked out, this is actually, by the time I'd done that 2 years, made sure that I could support myself, my son, we got ourselves into some secure housing, I just went really flat. And I just, it was like I felt quite lost. I didn't really know what I was doing, and I knew my priority was still my son, but I also knew that there was more to life than that, and I just felt flat. And so I went to a number of different retreats, I tried all sorts of different things. And I ended up drawing this diagram that you've referred to, because I was trying to work out what was important to me. And I actually, if people can visualise it, I drew a very simple picture of a house. And at that top point of the roof, I put the word joy in it. So I wanted more joy in my life. And it was like, well, how am I going to get that joy? And the next chunk, if you like, of the roof was my son's well-being. So my first priority in life had to be my son and looking after my son and trying to help him through his life, basically. So that was important to me. And then the third part of the roof, I was really recognised that it was connections to people was what was really important. Because, when you're a single parent, you're suddenly on your own a lot. I wasn't working with other people, so I was working from home. So I just didn't have the sorts of social connections that I wanted. And it's very hard with a 7 or 8 year old to go and establish those connections. So I knew that was really important to me. So it was sort of family and friends. I knew I needed to give more priority to that and put myself out there to make those connections as well. And then I also, and this is where to some extent it gets sort of interesting, I realised what I consider to be the foundations of the home. And there are 2 key things that I really thought quite a bit about. One was wealth, so I've put that as the bottom level in my foundation stones, and the next one was health. Because one of the things we hadn't talked about is that when I was 21, I got RSI, and I was told that I'd never be able to work again, and I would not be able to have children, because my RSI was so bad. I mean, I couldn't open the fridge, I couldn't turn on taps. So I was really quite nervous about, was I going to be physically able to look after my son on my own? Like, how do I do the gardening? The answer to that is I can't. I'm not very good at cleaning either. I can't scrub things.
Oh, I was going to say pay a gardener, sorry.
So that was exactly the solution. I had to pay a gardener, I had to find a gardener, I had to pay a gardener, I had to find a cleaner, and I had to pay a cleaner. So that's sort of how I resolved that. That health and wealth bit is, for me, really interlinked. So it's really important. So I got those sorts of things sorted as well, but there were still things missing in my life. And I came up with 4 what I think is pillars, which is the middle part of the house. And the first one to me was contribution, because I've learnt that one of my friends has a lovely saying, and she talks about we think our own problems are terrible until we actually look at swapping our problems with someone else's problems. And then we realise that actually our problems aren't that big a deal anyway. And I really identified with that, having gone to this single parents meeting, and it's like, my goodness, I am so lucky because I at least had a financial base from which I could really go off and do my developments and make things work in the property space.
And the financial knowledge.
And the knowledge and the skills. Yeah, so I had that. So it's really about contribution. How do you make a contribution? And in the beginning, it was very, very difficult to make. It's like, well, you know, I'm exhausted. How do I make any sort of contribution? And I ended up doing things like managing my son's soccer team for 5 or 6 years. And so it was just something that I'm quite good at managing stuff because that's my background. So managing a soccer team actually wasn't that hard for me to do. Yes, there were a few emails that went out at midnight and 1 a.m. in the morning to try to make it work. But it's like, to me, it was finding that thing where I could contribute to society.
So it wasn't necessarily financial, but it's time. So everyone can contribute, right? Yeah.
So in the beginning, it was purely, you know, how do I find a way to contribute and let my son see that I'm also contributing. You know, as a single mum, people often think you're just a drain on society. I didn't think I needed to be. So it's like, what can I do and how do I do that? And certainly now that contribution has gone beyond that. I try to do financial contributions as well. But after I did the soccer team, I then started sponsoring children in Africa to get their education. They're in the same sort of age bracket as my son, and I just kept that sort of thing happening as well. So that was really important to me. Then I had the other bits of my pillars in my vision that I've got. I need to keep learning. So for me, it's just important to keep learning. I don't know, there's something about me that if I'm not learning, I just feel like I'm shriveling up a little bit. So I need to be learning something new. Last year I took up dancing, so I'm now learning to dance.
Oh, great.
So it doesn't always have to necessarily be a mental study thing, but it's just something that's pushing you to keep learning. Also, I need a mental challenge. So mental challenge is important to me, and you've got to work out, how do I get that mental challenge? How can I do things in a better way is what I'm always looking for. And then the last one that really surprised me was I needed some sort of adventure in my life. And I found things coming and living in Perth after having lived in Melbourne, Sydney, London, Shanghai, Guangzhou. I found Perth a little bit tame. And it was like, oh, but I need adventure. But I was here in Perth on my own. My ex wasn't here. So I had my son all the time. So how do you get adventure when I've got my son? And the first thing that I did is I told his dad he needed to look after him for 2 weeks because I was going away. And so for a couple of years there, I managed to get a 2-week holiday, going to places like Cambodia. I remember being on the back of a motorbike, having a great time, thinking, oh my goodness, should I really be doing this? But it was really important to me and I needed that. And then when my ex couldn't do that anymore, I bought a motorhome and we drove it different parts of Australia, and we would leave it. Say we left it in Tasmania for about 3 years, and my son and I would just fly there in the school holidays. We'd pick up the motorhome and we'd just go travelling. So I found ways of putting those pillars of what was important to me in my vision and my life into my life to give me the joy that I needed.
And I love that, because I think what I'm really taking away from all of this is, and you came back and you met with other single women, and yes, you've got
and
men. Oh yes, sorry, parents. But I feel that there's a lot of people. Can be a mindset game as well. So there's a lot of people that they're in more of a negative space, and it's really hard for them to pull themselves out of it. You even creating diagrams like this. You knew you were flat. What do I do?
Yes.
Where do I find it? And you just did it, right?
Yeah.
So I feel like it's open to everyone.
It wasn't that instant, though. I mean, it did take me a while, and it did take a number of different iterations.
Yeah.
And I tried things, and then it's like, well, no, I'm still not feeling great. So what else do I actually?
But
have
you
to
were
do?
taking action nonetheless, and testing and seeing, and I think that's important that actually everybody can do.
Yes.
Because otherwise we can be we can be stuck in the negative and the can'ts and the doesn't happen to me, that kind of approach. And there's none of that about you, Julie. Like, you've literally just powered through the whole time, getting the challenges, but actually learning from them, growing with them, and just keep going, which is,
Thank you.
I love that. It's incredible.
Yep.
So I think we've spoke a lot about the topics that we wanted to touch on, and we have, in a little way, talked about financial knowledge, and I think there is more to be done in that space. And not just for women, but for men as well. I think there's a lot that, when we talk about property investing, it feels more for the elite, like the people who really know. And I think it can be learned, and everybody can do it. And it starts with some basic financial knowledge. What is it? Is there anything you would like to do in that space?
I'd like to do a lot. Can I give you one of my stories from it? I'd been married about a year, and we were wanting to save up for a house. So this would have been early to mid 80s. We wanted to save up for a house, and we thought we were doing quite well. We're saving $1,000 a month, so we were quite happy with that. But then myself and my ex at the same time both got a pretty substantial pay rise. And after that, we were still saving $1,000 a month. And it was like, what is actually going on here? So we just went back to something I used to do as a child, which we just started writing down everything that we were spending our money on. And just by the act of having to write down what else we're going to spend our money on, I think it forced me into what I now call conscious spending. So you just think twice before you spend money. And suddenly we were saving multiple thousands after we did that. We didn't even create a budget. We just did it. And we ended up saving so much more, and we were able to buy a house within a couple of years as a result of that. You would be quite jealous of that this day and age. But in those days, you didn't need quite so much of a deposit.
Yeah.
So that was fantastic. And then, as I mentioned before, as we went on, I really felt we were saving money, we were paying down mortgages, but we weren't financially smart about the best things that we could have done with our money. And we certainly weren't really leveraging that enough. And we could have done a lot more. Rather than just kept paying down a mortgage, we should have gone off and been buying another property, for example. And we just weren't. And I feel like I've spoken to quite a few people, say, in the FIFO workforce, and some of them are earning mega amounts of money, but they're just blowing it. And it can be on drugs, gambling, alcohol, or just toys. And I talk to women who, have got shoes and dresses overflowing from their wardrobes. And I think it's because we're not paying our future self first, which is one of the basics that a lot of financial gurus talk about. You should take a certain amount of your pay out and then try to live on the rest. And that's effectively what I'd ended up doing originally. It's like when we got a pay rise, we'd just try to keep our expenditure down to what it had been. We weren't just going to keep trying to utilise more money that was there. And I feel like there's nothing going on in our schooling system. I feel like there's so much money now in our superannuation funds, but I talk to people and there's not enough of us really working out how do we make our savings work as effectively as possible for ourselves.
To set yourself up for the future.
To set yourself up for the future. So one of the things that I must have made this decision about 15 years ago, which is when you saw me talking in those seminar, property meetings and things. That was when I'd been saying there's not enough people, there's not enough knowledge and information telling us how to do this investing stuff. And I thought someone needs to be talking about this. And then a little voice said, Julie, why aren't you talking? And it's not because I necessarily know what I should be doing in the best way, but it's just, this is what I'm doing. What are you doing? How can I get better at it? But someone has to start talking first. So I literally started talking, and I met Neil at those seminars as well. So Neil and I were both presenting. We were on panels together at the same meetings, all sorts of things. And I listened to what he was doing in the HMO space. And that's why I ended up trying to use that idea for these women over 55 that I was trying to target. So I think we all have a responsibility to talk. So when you said to me, Julie, will you talk on our podcast again? It's like there's this little voice saying you can't say no, you have to say yes.
Yeah, because you said, well, I don't feel I'm doing much in the impact space, but you 100% are, just from one of your pillars being contribution. And I think that what is really, really important is the fact that it is about being intentional in what we're doing.
Yes.
Whether that is, we talk about the investing in the property is one thing, but there's also then investing in the people in the sense of, the type of housing that we're providing. Are we thinking about the end product for the people that are moving in there? Are we looking at co-living as a strategy? Because that encourages human connection. It's all about this being beyond, so it's more and more, isn't it? So it's beyond just a property, beyond just investing, and it's how we can really open our minds up to think more intentionally about what we're doing. There's something though that you mentioned, because yes, the school system, that's like a full other topic, right? But you mentioned as a child that you would write down what you're spending. Well, how did that come around?
I don't know.
Yeah,
I just did it, and it wasn't something that my parents encouraged. Neither of my older brothers did it, but this is something that I did. And I know that I had gone, and my mum used to teach cooking at night school, and I went with her and did the washing up, and I think I got something like, I got a lot of money. I think I got something like $10 a night when I did it. And then and that was from about the age of 13, I was allowed to do that. And then from 15, I went and worked as what I still think of as a checkout chick for my local Woolworths store. And I would work for 4 hours and I'd get $5. And it's just amazing. And I remember, taking my $5 and going and trying to buy a skirt and seeing that a skirt was going to cost me $20. I'm going, but that's 4 mornings' work, It's like, and then I got myself a sewing machine, and I would make my own skirts. So there's just something ingrained in me.
Oh, a solution-focused actual go-getter. Yeah, that's incredible.
So that's what I did.
Yeah.
And then I think it was from that I started to, write down what I was spending.
Yeah.
I don't make my own clothes anymore.
Well, you don't need to now. No. But, I actually bought myself a sewing machine the other week. I had to take something up. Sometimes, we talk about intentional spending or conscious spending.
Yes.
That, I actually went and bought some jeans from Kmart that were $20, and it would have cost me $30 to get them taken up. And I thought, no, I tell you what, I'll just get a sewing machine. So when I get these things, it seems crazy. Don't overspend when you don't need to. A few, I guess, more pointed questions just around that intentional space. Why do you think it's important for more investors to think this way, to think just beyond profit, to start thinking more about being intentional?
I think you'd be surprised how many people do anyway.
Yeah, okay.
So some in that space, I have one of my contacts I'm part of Results Mentoring, and I've met a cardiologist. She's in South Australia. She is also wanting to work in this space, and she's coming across to Perth. So we're going to catch up and have dinner next week, and we are talking about this space. And certainly at any time I have a chance to speak, I always mention these things, and it's the number of people that come up to me and talk about it, especially women. I think that's possibly being a female, it just attracts other women to those discussions. So I think there are a lot of people out there that want to do that. It's just knowing how. And it's not always just about the dollars, but I think the dollars are really important. So I can't stress that enough. Any deal has still got to make sense. You've still got to make a profit. It's then just how do you do something else around that. Can I also mention another one? So one of the things that I've done in Perth, I had a JV partner, and we were building properties for downsizers. So again, we needed to make a profit, but here was like a social contribution as well. So there are too many people in Perth that want to downsize. There certainly was when we started doing this, but they couldn't find properties. Often the properties that they could downsize to were more expensive than their own property. So they couldn't really afford to downsize. So we would end up designing and building for them. They would often put capital into the project while we built it. And so we were often doing we did a few triplex and quadplex sites. But one of the things that we did in those, we specifically tried to make sure that every window looked out onto green. We spent the time thinking about a solar passive design. So where's the sun? We thought a lot about where's the airflow? How do you get airflow through here? Making sure we had natural light. So we put things like skylights into an internal bathroom. And they were very small things. It didn't cost very much. It might take us a little bit more time because we'd have to work with a designer or an architect to get these things sorted out properly. But it wasn't very expensive. And we'd build these properties where we had thought about. So it comes back to your thing about intentional. And there was one particular site, it was in Callaroo, and next door a group of tradies were building a similar triplex style. And they hadn't given this any thought at all. And you go, and there was no natural light in these things. So people's living spaces had no natural light in them. People's courtyard had no natural light. Now, the regulations have changed now, so a lot of those things are now people are forced to think about them, and it's being caught up. But it's being intentional and knowing, how do I get the best possible outcome from this? It doesn't necessarily have to cost you anything.
But it's better for the outcome of the person moving in. And this is what I love about your whole concept there, because environment is really important for people to thrive. So going back to this, it's not just a roof over somebody's head. Like, there's a lot more that you need to thrive. If you were given a roof but you had no natural light, you know, your mood's not going to be lifted. If there's no furniture in there, if it's low quality, if things are breaking. It's all these things. It's more than just the property, isn't it? It is being very intentional.
When must have been the first time I went and lived in London, BP, we're going to rent us a place. We couldn't find anywhere to live, and it was my responsibility to find somewhere. My ex was working, and I was getting so depressed that he ended up coming with me. We ended up renting. I looked at places that were above fish and chip shops. It was just it was so hard to get accommodation, and I ended up living in this apartment that was in an old church. But the problem was, you go into, I hated it. The apartment itself was nice enough, but you go into the main bedroom and you'd look out of the bedroom window, and you'd have less than a metre before the next door building's brick wall. And I just found it the most depressing place to live, because, you know, as you know, the UK, you can stop having light at 3:30 in the afternoon. So this place, it was just so depressing, and it's made me so aware of the impact on your mood of having natural light, having airflow, seeing nature, seeing green, seeing trees, seeing grass, or even a vine growing up a fence to give you that to look at. It's just so important.
And it is the little touches. Even, you know, some investors want to try and cut back on money, so they don't want to have to do a garden. And even if it's artificial turf, it's still green. It's still giving something. It's just, but it's one of them things, isn't it? That not just mulch everywhere, not just everything beige and brown, and even with our interiors and the furniture packs we put in there, it's all considered. It's not just about how much bang for your buck you can get. It's like, how are we going to make the people feel at home, have a different feeling? It's all about the feels as well that actually help
to me. So there's probably two things here. One of the things always through, you listen to these property gurus, and they always tell you, you're not buying this for yourself, and you should just go on the numbers. And I, to an extent, agree. I'm not buying this for me to live in, but I've changed that. And I say, at some particular point in my life, would it be suitable, and would I be happy to live here? And so if I think I'm happy to live there, then I'm happy for my tenants to live there. And it's like, what do I need to do to make that space somewhere that I would be happy to live? And I just think that is so critical.
Absolutely, because it doesn't necessarily mean it has to be in the best suburb. It just means that the surroundings that it's in and what the house looks like and how it's produced is what you would feel comfortable being in. Because we do have investors go, oh, I don't like that area. It's like, no, but that's why people housing's needed. So don't rule that out. But it's the execution of it.
And the other side to me is that there's a real financial impact of that too. So what I've learned is, if I make something that I'd be happy to live in, the market of people who are also happy to live there tends to be larger than if you just purely crunch in the numbers. And so then people are more likely to stay in my properties because of it, or stay in my house. I won't have such a high turnover rate.
And you have more respect from the people living in the house. They want to respect the house more because they feel that it's worth respecting.
Yes, yeah.
That's awesome.
And even in my commercial space, I find it quite interesting, because I talk to the property managers for my commercial, and they will tell me things like, well, the landlord in some of their other buildings aren't prepared to do these things. Whereas I will regularly try to upgrade the building or do something that makes the workspace better for my tenants, and that just keeps the tenants there for longer. So to me, it has a good social impact on people, but it also has a financial impact. And I know, like years ago, when I had to replace the air conditioning in my commercial building, and I ended up, so this is in Launceston, I ended up paying from an engineer from Melbourne to go to Launceston, because they just wanted to put in the stock standard air conditioning models. So this is long before COVID. And I was saying, well, surely there's got to be something better than this. And all they were able to do in the end was they put a temperature sensor in, and they sucked in more fresh air into the building. So they would say, I can't remember the exact temperatures, but it's something, if the air temperature is between, I think it might be 18 to 24 degrees, they'll bring in more fresh air from the outside. So it would cut my air conditioning cost down because we didn't have to just recycle and get the air back to the standard temperature. We'd bring in fresh air. Well, that made a difference during COVID. So you make these decisions which are what is better for the environment, what is going to be better for my tenants, and it generally has a financial payback.
And it's normally not incredibly more expensive at the beginning.
No, I think that cost about another $10,000.
Yeah, so it's nothing that's like huge.
It's not extravagant.
But on the back end, you're actually probably going to make more, or
Yes.
people are going to have that longevity in the tenancy.
Yeah, and then so during COVID, we were able to let people know about what was going on with fresh air being recycled through the building.
Yeah, I love that. We're going to slowly wrap up now, and I kind of want to put a bit of a goal in place for me and you that by this time next year, we'll do another podcast or announcement of some sorts to see what impact we've actually made in this space, where we've helped at least 50 women in the over 50s cohort. Are you up for that?
Yeah, it could be a goal.
Yeah, that's it.
We'll
So that's the
go.
goal. That is the goal, to see if we can at least impact 50 women in the in that space. Before I go, there is one question that I want to ask you is, when you look ahead, what kind of legacy do you want your investments to have?
So I've started on the first thing is working with my son to try to build up his skills so that he can also do this sort of work. I've also been encouraging nieces and nephews to get their first property, and I got quite wound up about it 2 or 3 years ago. And as a result, they've all got in and bought their first property. And my nephew that did it first, he's already recognised that he's made a couple of $100,000 because of the capital growth that went through with the Perth market. And he's turned around and he's now buying his first investment property as well as his own home. So it's, to me, that legacy is already happening, and that has occurred. So I'm really pretty chuffed about that. Next thing, so ideally I would like to have it set up so that I have a trust that the family manages, where the passive income coming from that trust is supporting some charity. So it's just something that is ongoing beyond my lifetime, where the passive income out of this is actually supporting women over 55 in housing.
Incredible.
That's the goal. Am I there yet?
No, but we need the goals, don't we, to work towards, and you've certainly been able to do that throughout your whole lives. It's been awesome speaking to you today, Julie, and I'm really excited about the impact that we can actually make together as well. Thank you so much.
Thank you, Jo. It's been lovely.
Thanks for watching. Make sure you tune in the same time next week so you can stay up to date with all cash flow positive property updates.